It's the final business day of the week. Welcome to Business Incorporated, coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwago. Coming on the show, South Africa's Constitutional Court orders government to pay social grants on April 1 via its current service provider. And China's Sinopec close to snapping up Chevron's South African oil assets. Plus, Tulu Oil PLC proposes the right issue of 466.9 million new shares at 130 pence in a bid to raise $75 million. Now let's get started, and we're starting off with the markets. And here in Africa, the All Share Index was trading in the positive territory at midday, up 0.16%. South African market was in the red, down 0.24%. In Egypt, the market is closed for the weekend, but on Thursday, the index jumped 1.87% as EL Swede Electric climbed 2.5% after signing a memorandum of understanding with the Egyptian Electricity Transmission Corporation to build a wind power plant in collaboration with Japan's Marubeni. Nairobi closed down 0.43% on Thursday. Our Middle Eastern stock markets, of course, are all closed today for the weekend, but the markets rose on Thursday after the U.S. Federal Reserve hiked interest rates as expected, but signaled no acceleration in the pace of monetary tightening. But Gulf bourses lagged emerging markets in general because of concerns that low oil prices and government austerity measures will continue to weigh on corporate earnings. The Saudi stock index rose 1.26%, while Dubai was up 1.13% and Qatar added 0.67%. The Saudi banks outperformed for a second straight day after Moody's raised its outlook for the Saudi banking sector to stable from negative on Wednesday. Qatar was buoyed by a 1.6% rise by Qatar National Bank, although Qatar Navigation sank 5.1% as it went ex-dividend. Abu Dhabi's index rose 1.1% but was restrained by Abu Dhabi Commercial Bank, which fell 2.4% as it went ex-dividend. In Europe, markets are looking a bit for taking a bit of a breather after hitting record highs during Thursday's trading. Our investors are mainly focused on politics with finance ministers and central bank governors of the G-20 gathering in Germany. Let's bring in Olaf Krieger, DWTV Channels TV financial correspondent and the Frankfurt Stock Exchange, to chew these for us. Good afternoon, Olaf. Thank you very much for joining us. Well, G-20 finance ministers and central bank governors meeting is on the tap today in Germany. Are you sniffing around this meeting and what their agenda looks like?
Well, first of all, the agenda is filled with so many key points, with so many issues. In nowadays, there are so many conflicts in business questions, and of course, traders and investors here in Frankfurt are desperately waiting for some encouraging news, encouraging words, of course, because of this special kind of situation. And we have to keep in mind that this is a meeting with the most powerful economies the finance ministers of the most powerful economies in the world. So there must be an output coming from this meeting in the German city of Baden-Baden, and no one expects something really concrete, and of course no treaty, but probably some common ground to get things off the table, to get the conflicts off the table we see in the worldwide economy right now.
Okay, let's see what Germany's finance minister has to say after meeting with his counterpart, Steven Mnuchin. Of course, he says Germany's trade surplus was due to the fact that it doesn't have its own currency and not in charge of its monetary policy. Would Schäuble's statement ease tensions a bit between Berlin and Washington?
Well, this is a very old conflict, and traders here at the Frankfurt stock market pointed out that this special issue has nothing to do with currencies. It's because of Germany's very high exports everywhere in the world. And Donald Trump said in his campaign he sees so many German cars in the city of New York, in the city of Washington. And here's why. This is highest quality with an excellent international reputation. And it's always the same picture with other trading partners in the world, because the German economy is pretty strong and German export figures, as we all know, are still excellent. So I think this is the key point. And again, I have to say that it has nothing to do with currency, so with the euro.
All right, Olaf. So wrap up the trading week for us and give us some outlook for next week.
Well, it was a rough one, I have to say, because so many decisions have been made in this week. Let's start with the Federal Reserve to raise interest rates. It's 1 point, and we had the result coming from the Dutch election, and they show that the Europeans and, of course, the Dutch are still very much in favor with Europe. And now we see the important meeting between Chancellor Angela Merkel and Donald Trump in the U.S., of course, the G-20 meeting in the city of Baden-Baden. And I think one of the most important topics in the upcoming week, it could be the ECB, the European Central Bank, because everyone here is waiting which kind of strategy the European Central Bank will run in the near future. So another exciting week is ahead, that much is for sure.
Well, rough one for the week. Well, we'll look ahead to see what the ECB has to offer next week. Thank you very much, Olaf, for your time, and do enjoy the rest of the weekend. Olaf Krieger, DWTV Channels TV financial correspondent, put in there from Frankfurt Stock Exchange. We move over now to the U.S., where the stock index futures pointed to a flat open on Friday as traders eyed the release of data and the meeting of G20 finance ministers and central bank governors, which kicks off in Germany. On the data front, industrial production and capacity utilization are set to be released at 9:15 a.m. Eastern Time, with consumer sentiment and leading indicators due to be released at 10 a.m. In the meantime, today is certainly going to be a green day as people around the world of Irish descent and those just looking for a good time celebrate St. Patrick's Day